Ken Orange Theory Trader back with you with a video talking about a risk management plan for explosive profits. So let's get right into it. Now, this is the approach and the analogy that I want to draw between the concept and the execution. So think about a boxer. If you've ever seen a boxer, and think about how he or she tries to approach their opponent. Do they try to just swing wildly and hope to just get lucky and land a knockout punch? No. Some of the punches that they throw are just jabs. They're just feeling their opponent out. But other times, when they see a big enough opening, they're going to take a strong punch that is designed to knock that person out. Okay, so we want to manage our risk the exact same way. Some of our trades are just going to be jabs. We're not trying to make 1,000% in one trade. But other times, yeah, we're going to go for the gusto. So we're going to manage our risk in that mindset. So here's the risk for smaller accounts. Because small accounts are small, we're going to consider our risk from 4 to 5%. Okay, 5% max. If you have a larger account, risk 1 to 2%. That's industry standard. Nothing, nothing necessarily wrong with that. So for an example, let's say you have a small account of $100, you're going to risk $4 to $5 per trade. If you have a large account, say of 10 grand, you're going to risk 100 to $200. Now, a quick disclaimer for the folks in prop firms: if you have a $10,000, say, challenge account or whatever, you're not risking $100 on that, because remember, you probably only have a 10% drawdown, so you got $1,000. So always base your risk on your drawdown, not the quote unquote balance that they say that you have. You really don't. Okay, but I'm really focused on people who trade their own money. So here we go. The reward. This one we're just going to do straight 1 to 3 risk to reward. Take it or leave it. So we're aiming for 5% risk to make 15% reward, or if we do 2%, we're going to aim for 6%. It's still 1 to 3. It's just numbers at the end of the day. So for example, for the small account, you're going to risk $5 in hopes that you make 15. Your larger account, you're risking $100 to try to make $300. Okay, which will be like the 1%. So there we go. Now, how do we compound profits faster though? Here's the main thing that you want to do. The goal of this plan is to simply win 2 trades in a row. That's your proverbial knockout punch. Okay. Every other trade that you're going to take is just a jab, 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 jab. The only time you're going to go for a knockout punch is when you win a trade. When you win a trade, that's when you're going to really push your pedal to the metal. Meaning that, for example, let's say you have a $100 account, you risk $5 and you win, and you get your 1 to 3. That puts you at 115. What you then have to do is risk all of your profit. You're going to risk the whole $15. Okay, and remember, the beautiful part of this plan is that if you miss, you're back down to 100. You didn't lose anything. See, the point is that we're really trading house money at that point. You didn't start with 115, you only started with 100. And I'm going to show you something key in these spreadsheets I'm going to show you in just a second. That's really should get you excited. But again, if you are at 115 and you risk the 15 with the same 1 to 3 to make 45, if it wins, your new balance is going to be about $160. That's a 60% gain on your investing or trading in 2 trades. Okay, most people couldn't get 60% in a year. All right, but I'm showing you how you can proverbially do it in 2 trades. But again, this is for a smaller account. Okay, this is not. I'm not telling you you can get 60% on $1 million, and I'm not saying that. All right. So this is just something to get your momentum up. So a special note: remember that after you try to get a knockout punch, your next trade needs to go back down to either the 4 to 5%, depending on where you want to start at, or if you have a large account, 1 to 2. So the only time you're risking 5%, or the only time you're risking your whole profit, is after you win a trade, and that's it. So I'll show you the example of this now, okay? Because that's really to protect your downside. So I'm going to show you just 3 real quick profit projections on this, okay? So let's take a look at 3 account situations. I'm going to show you somebody who starts with a $100 account, 5% risk, $500 account, 5% risk, and then a $10,000 account with 2% risk. All of these risk to rewards are going to be 1 to 3 with a 50% win rate. I think that's pretty fair. So here's the $100 account person, okay? So you see here the risks are fairly small. But I want you to focus on this column right here, the balance after their trades, because this is 50%. They have 5 wins and 5 losses. But what do we notice here with these balances? 115, 100, 115, 160, 152, yada, yada, yada. They never went under $100. They stayed in profit even though they lost half their trades. Really think about that. They stayed in profit and only won half of their trades. Why though? Because of the power of these knockout punches. They risked 15 and won 45. Okay, but then they went back down. Okay, it's coupled not just with the power of the knockout punch, But then regardless of what your balance is, you go back down. See, when they made it to 160, they didn't risk 45 trying to make another they didn't do another 1 to 3 based on the 45. No. They took the conservative route and they only risked 8. Okay? That's why you have to constantly keep your risk dynamic in this plan. Okay, they risked 8 and lost. They risked 7 and lost. But that's how they were able to keep most of the money that they made. And when they won 722. I'm sorry, they risked 722 to make 21. And while they could have got another knockout punch here, they didn't, according to this. This is just random wins and losses, okay? But then they lost 21, okay? That took them from 166 to 144. But even at the end of all this, they still ended with 57% return with a 50% win rate. I'm not big on win rate at the end of the day. I'm really about how much are you making and how much are you losing. And as long as your wins exceed your losses, you cannot lose money in this game. Okay, you can't. It's just mathematically impossible. But we have to be smarter about our risk. Okay, you can probably I venture to say that most of you guys know how to trade, but where most people fall short is they don't know how to grow capital. They haven't been taught how to properly manage their money when it comes to trading, to protect your profits and also grow them, how to play offense and defense. It's give and take. So now let's take a look at the $500 account here. So this person here, they risked, this is still 5%. So they started with 500. They risked 25 to make 75. Okay. Then they lost, but then they won. They risked 75 and made 225, right? Still the same, but nothing is really changed. It's still straight 1 to 3. And they're only risking house money at that point. And what do we notice in this column once again? This balance never went below 500 bucks. Now, once you master this and can be disciplined with it, then your only issue is going to be getting more capital because you figured it out. Okay, you figured out how to protect your downside. That's the main thing. And I'm not even talking about adding multiple entries here. All this is based on just one entry. All right. So we notice here, though, like I said, they went from 575 to 500, 575, 800, 760. I think the biggest balance on here was it 830? Yeah, I think it was 830 bucks. Okay, but they started with 500. They just could have easily pulled out a couple hundred or two if they wanted to reward themselves, etc. So you don't have to compound forever and ever. But the point is, though, is that playing offense and playing defense. So now, lastly, let's take a look at the larger account now with $10,000, and this is with 2% risk. So at this point, you should be doing pretty well for yourself. You're risking 200 to try to get 600 here, and they did that. But then they risked 600 to try to get 1,200 and lost. All right, I'm sorry, 1,800. That would have been 1 to 2. 600 to 612, 1,800. Gotcha. Almost $2,000. Okay, in one trade. That's not bad. All right, and they did hit it right here on this trade here. But at the end of the day, did this balance go below 10,000? What they started with? No, because why? The losses were small. 248 loss here, 243 loss here. Now this was a sizable loss here, 714, but by that time their balance was over $12,000. So at the end of this, they started with 10,000 and ended with $12,371.03 in this example. This is still a 50% win rate. Okay, but they still made $2,000 in 10 trades and only won half of them. I hope that gets you excited because it's one thing to look at candles all day, but it's another thing to get a withdrawal in your bank account based on you managing risk. Okay, that's what's going to get you paid, not looking at candles all day. Managing your risk is what's going to get you paid, I promise. So in conclusion, in a perfect world, you want to win 2 trades in a row and withdraw the profits and take care of some expenses. For example, if you had a $2,000 account and wanted to use 5% risk, after winning 2 of those trades, that could net you over $1,000. How? Because 5%, you're risking $100 to make $300. Okay, and if you win that, you make 300. Then you risk the 300 to try to make 900. And if you win that, that's 2 trades in a row. 300 plus 900, that's $1,200 right there in 2 trades. That's excellent. Okay, so imagine making over $1,000 in 2 trades, right? But that's what I said though. Once you get this down, then it's just going to be a matter of trying to find more capital. And if you want to take the prop firm route, trying something like this, I'm not going to say don't. I'm just going to say your own money is best. But if you want to experiment with prop firms, feel free. So this is one of many risk management models. But my main point is that no matter how you trade, you need to have a plan. It's no different than having a budget for your expenses. or the money that comes into your house. What are you doing with the money that you're getting? What are you doing with your profits? Are you letting them sit there? Are you risking them all? What's the plan? So you have to have one. But if you can get your knockout punch big enough, you can live off of your trading profits depending on your situation. So imagine taking 2 trades, winning them, and then making that withdrawal and being able to pay your rent, pay your mortgage, pay your light bill, your car note if you have one, your children's daycare if you have a family, maybe some medical bills, donating to your favorite charity or church, helping out a friend in need, helping out your parents, helping out your children, paying for your children's college. I mean, money's just a tool at the end of the day. All right. It makes a great servant, but a terrible master. So as traders, we need to be the ones in control, and we move the money. We don't let the money move us. That's what I want for you. That's what I hope for you. But again, it starts with discipline and risk management. So I hope you guys get something out of this. If you have any questions, leave them in the comments. I appreciate your time and attention, and have a great rest of your day.